Hey guys, how's everybody doing? Well, I don't like the shape of this hat. Oh well. I like the ticker this associated with. I didn't pre-warn any of the guys in Discord. I probably ought to go get them. Um, they'll be over here soon enough. I was going to come on at 2:30 today and try to do some option stuff, but there's nothing that I'm interested in for tomorrow. I promise we'll do some uh, for Wednesday and Thursday. I mean, there's tons of stuff, and there's good stuff tomorrow also. But I've been working on other projects. So anyway, all right. Well, let's go. Trying to think. I probably should go to Discord and tell those guys where I'm at. Usually I post it. Oh, there's Marcus. All right. Well, they found it on their own. All right. Well, that's good. As long as Marcus is here, we can start. Where is my darn? Where is my darn? I can't find my little caffeine drops. Anyway, there's enough in this one. It's not really the caffeine that I want right now. It's the sugar. It's the taste. Okay. Let's look at the market. We have 13 minutes left in the day while we're waiting for other people to get here. Then I do have some good stuff to talk about. I want to talk about why in the heck is ULTY not even in my top 20 on my list. I had to look it up too and check the math. It's making me mad because, I don't only manage money with facts and figures. I also use judgment, and my judgment likes lots of things that maybe don't hit the facts and figures list, and ULTY is one of them. So, but in any event, one of the worst performing ones on the Max Factor is something else I own, GDXY, I think, but I didn't get it because I expected it to be the best performing. It's a partial hedge, and I'm getting ready to drop it or switch it out from GLDY anyway. So, all right, look at this. This is just ridiculous. Those are weekly bars, but yes, we could put it on daily bars, but that's ridiculous too. That is absolutely ridiculous. All right, well, that's the NASDAQ. Here's the ES or the S&P. Holy cow. Look at that. Look at that. Bitcoin, yeah. Same story, different days. Trend between 117 and 120 like it has for a while. The 10-year, at least it's not going up. Not that much anyway. AMD is just a monster. Look at that thing. Another bullish gap. So there's one right here, one right here, one right here, and one right here. They've had 4 gaps, and that's just creating a lot of buy pressure. It'll last until it doesn't. I'm sure Amazon looks the same way, or it does. Coinbase finally took a break today, pulling back a little bit. Oh heck, did it hit what did I do here? I don't even remember doing that. I think I made I did that a long time ago, I'm sure. I made a trend line. Anyway, we're right at trend line resistance, I guess. We went right to it. I may have done that recently. I don't remember. I probably did because I probably did and just forgot. All right, well, let's look at the buffer report. There's more people here. It's just Marcus twice. Enjoying the sideways market. Heck yeah. All right, so let's look at this buffer report, and then we're going to talk about the Max Factor. I just ran a new Max Factor, so we have new things on. We're also going to talk about the box spread a little bit, and I guess that's about it, unless I think of something else. All right, so let's look over here at the old index buffer report, see what's going on. I know I have I'm working on a new thing of sweetener somewhere, a new Mio drops. All right. Well, those are officially done. I need to throw them out. All right. We'll just start over here on the Yield Max Buffer Report. Let's see what's going on in Yield Max land. Boy, great day for SMCI, not catching a lot of upside, just about half of what the parent does. Now, AMD's doing a better job catching upside on a relative basis. Looks like Tesla's getting about 60% upside. NVDY is getting about 80%. But you can pretty see, we look at these every day, for a year or so. And it's rare that it happens that someone will beat the parent. But typically, it's between 60 and 80%, something like that. And that's been since Yield Max instituted the credit spreads instead of just a straight covered call. It used to be more like 40 or 50%, but this is kind of a visual representation of why these things lose ground in a bullish market, or you could kind of see it every day. The good thing, the opposite thing is, look, they don't get as much downside either, so they gain ground on a total return basis in a bearish market. But anyway, that's just a physical manifestation of that. We can see that every day. All right, look over here in SPY land, in the Index Buffer Report. The only SPY fund that's up is WDTE from our friends over at Defiance. Great job, WDTE. Nice job. And what else is up? ZVOL. ZVOL's up, but then, of course, SVOL's getting hurt. Boy, SVOL's, I think a lot of people just giving up on SVOL, or based on what I'm reading on the internet. Old LFGY is down a little bit, but I mean, only 0.8 of a point is nothing for LFGY. I mean, anyway. But USOY looking really good. Looking really good. We have AIPI outperforming today, as is Triple QI. Boy, it's a good day for Defiance. Now, I think Defiance just switched to the target 30, and I know I ought to know for sure, but the reason I say I think is because last night when I was trying to get the dividend data, Jackson, what are you chewing on? What do you got? That's okay. It's just, that's all right. Anyway, last time I was trying to get the dividend data I was looking for dividend data for Triple QI, or I have dividend data, but I was trying to confirm what I had. So going to the website, going to the horse's mouth, so to speak. Well, anyway, I noticed that their literature says target 30 now. Now I've seen the prospectus for a while that said they're going to switch to the target 30, which is just where they target 30%. It's the same, basically the same thing as, SPY-T, except SPY-T targets 20%. I guess they're just going for an extra 10%. An extra 10% yield, which is going to mean it should do worse on the upside than even SPY-T. So, not that SPY-T does bad, but I'm just saying the more, as you guys know who watch the video, the more yield is, just think of a yield as a tax on the upside. Helps you on the downside, it's a tax on the upside. Maybe it's neutral in the big picture, but I mean, if you're expecting a lot of upside, especially a lot of NAV upside, it's a tax on the NAV is what it is, because it's paid out of the NAV. Anyway, all right. Well, look at this. Would I just see Q up? Oh yeah, I thought Q up was up again. It isn't. It isn't. That thing's been amazing. Now that I mentioned it, I'm going to have to look really quick. We're going to weave over into Q up territory. Now, for those uninitiated, is an ETF that they call it Daily Delta Q100 upside option strategy. Somehow they buy options and they get exposure to the upside, leveraged exposure, but they do it different than TQQQ, who's my go-to for that type of stuff. So let me just run those two against each other really quick. Then I have other stuff to talk about too. I'm not going to get too sidetracked on Q up. Oh, what am I doing here? I was typing in dividend channel. Wow, there it is. All right, so we'll look at Q up. They just have a different mechanism, their leverage. I think I forget what it is, but TQQQ. Oh, I know what it is. And I thought it was crazy too. They invest 10% of their money every day. So now the thing is, if you have 10 losing days in a row, you don't lose 100% of your money because it's 10% of a declining balance. But when things are going well and they're betting, they use 10% of their money every day to buy at the money calls, I think, on the Qs. I mean, you want to talk about a ballsy plan. But anyway, let's see how they've been doing. Now, in the pullback, I mean, this is impressive. I mean, that's the problem with TQQQ is the pullbacks. When you use leverage is, there's no free money, of course. Leverage certainly isn't free money. So you pull, but the market was only down, 15%? Here we have TQQQ down 40%. And the NASDAQ was down more than 15. Maybe the NASDAQ was down 20, but you doubled the NASDAQ's downside with this. Jackson, what are you doing? You doubled the NASDAQ's downside in TQQQ, but I'm trying to zoom in, but look, you only got 20% downside in Q up. That's impressive. I think we've looked at this before. I forgot about that, but that is impressive. And then look, Q up stomped it on the upside, but it's because it didn't fall as far. But then, I mean, or that's what I would attribute it for. But TQQQ looks like it's going to catch it. But if it looks, and not financial advice, but it looks like if the market sells off again, based on last time, the Q up might do better than TQQQ. But yes, that's exactly what it is. This is a money management scheme. They're investing 10% of their portfolio every day. Can you imagine 10% of your portfolio in options in a decaying asset every day? I mean, options do decay. That they do erode. That is erosion, is options. Long options is what is erosions. That's why people push back so hard when you try to say that these things, short options, erode. Yeah, I know they have other problems and stuff, but they're actually making money off the option erosion. Now, but I know it's a complex subject. Okay, so I'm going to get off of that. Let's go talk about something. I want to see, let's go look at the max factor. I really like this. I'm really liking this more and more. And I know I've been going through growing pains, but I want to try to explain how it works, or let me show you guys because it makes me mad. Alti is killing it, right? Let's bring up ULTY. Oh, I typed in 50. What am I talking? Alti. All right. But I just want to see the raw numbers because I'm just mining FinViz. So it's, it's just pulling numbers off here. So let's just look at them. Because I'm trying to figure out, what's going on. So the 121%, and that's one of the main inputs. The new max factor has 3 inputs. I'm going to make it open source. Anyone that's listening now, we can talk about it. It's this number, 121%. So that ought to put it in that's part of the deal. Okay. But it's also the performance for the quarter, and that's only 6%. Okay. So without giving the formula away, let's just imagine that you multiplied those two together. Jackson, what are you doing? Are you all right? You want to make an appearance? So that's the main part of it. And then I divide by a measure of volatility. So I'm looking at that. I'm saying, okay, it was 121 and 6%, not enough to get you on the max factor. And look, there's a lot better choices out there, just mathematically. I don't use moving averages anymore. What I figured out is the performance for the quarter also shows you the same thing that I was trying to look at in the moving averages. The max factor is more complicated. I use relationships to moving averages, but it didn't really give me any advantage over just using the quarterly performance because this is NAV performance. That means the NAV's up 620. So and this of course is yield. The yield and NAV are kind of an opposite ends of the spectrum, and they compete against each other. Because why is that? Because the yield is paid out of the NAV. So a high yield can knock the NAV down, but that's not the only thing that controls the NAV. The NAV is also controlled by how far out of the money Jay and his team sell the options, how effective they are at rolling the options, rolling up and out to try to catch more. It's a complex thing, but anyway, those are the two basic inputs in the new max factor. Look at that money coming in, just parabolic. Are they over 2 billion? You're kidding me. Yeah. Well, all right. Anyway, teach his own. I mean, it's a great company, but I mean, it has twice as much AUM as WiMAX, and WiMAX is a great idea as well. They're both great ideas. They're, GPTY is a great idea in my opinion. I mean, there's lots of good ideas out there. Anyway, okay. But now let's go back to the max factor. But knowing what we know now, let's look there. So 100, and I was just beside myself. I was thinking maybe I copied a formula wrong. There's no way that 121 plus 6% NAV return won't get you in the max factor. Anyway, I just ran a new top 20 list, but let's just go look at that top 20 list. So look, there's not one thing on here that has just 6%. Okay. And there's a couple of things on here like SMCY that has that kind of yield, 109, 121, that's close enough. Okay. But SMCY has got 109 with the 14% NAV return. So yeah, I'm saying that I know it sucks that Alti's not on there. There's a lot of Alti fans out there. If Alti starts doing better on the NAV, it would get back on there. Or also some of these other ones, maybe these other ones are too aggressive. Maybe they'll do worse on the NAV and Alti will protect capital better. I mean, I can't predict the future, but I think right now I'm just going to have to resign myself for ULTY not being on there. Now, and also somebody in the comments that's a frequent commenter that not just a troll or something said, hey, what happened to MSFY? It used to be on there. Yeah, and it used to be at the top, but that's when I was doing the moving average formula, and I wasn't even using yield because I was using total return, and the yield is part of the total return. Well, that formula gave me super duper safe. It was too safe. So then I made this formula, which I think's better all around. Because I didn't want, you have to have Coney and COIW on there, and those weren't even making the too safe of a formula. So anyway, I like what this is showing. These are the kinds of, it's showing what I want it to show now. But the reason I'm explaining it to you guys is because it may not be showing what you want to see. And if it isn't, I'm trying to explain it. It's probably because it's just math, and there's better either higher yielding or higher NAV returning or a combination of the both out there than your fund. But now on the MSFY question, that thing's a monster. So I'm thinking that just to get back to that question, MSFO did make the list. So MSFO had NAV return of 10 and a yield of 31. Let's go look. I'm thinking of maybe a data problem on why MSFY is not on there. One other thing really quick. Max factor, it's max convexity at Iagon, IAGON.net. I've got this working again. If you want to check on the top 20, it should be live here, accurate. And not only that, I now show you the now let's just look. If you want to check on it yourself, and I'm not going to switch the formula anymore. This formula is solid. Okay, so there's today's top 20 in VDY, and I have them listed in order, and I'm showing the yield because you can't really show the yield and the NAV return. They aren't at the right scale, and it just. So I just figured yield. Yield is what most people are interested in. So But there it is, and you can check on that yourself. Okay, so back here. Back to what I was talking about, but let's get in the middle of MSFY because that's ridiculous. It's not on there, but let's just see. Let's kind of do a little audit on it like I did with ULTY. When I looked at ULTY, I thought, okay, yeah, that's why it's not on there. It's because of the NAV return. It just, it's just not high enough. Here's something else to consider. The NAV return helps. It's not a linear equation. ULTY only got 6% upside. That other one I just showed you, MSFO, got 10%. Well, the higher NAV return, because remember the yield is based on the NAV And if you're paying a high yield on a growing that's growing at 10 versus something that's growing at 6, I know it's 40% more, or no, it's not 40% more. It's 75% more. It makes a difference, and that's why. I mean, so once I started thinking about that, in other words, the NAV return helps in a nonlinear way, in a convex way, I guess is maybe what I'm saying. Anyway, as soon as this stuff freezes up, we'll figure out why it's not on there. Anyways, the market looks like the market's closed. I mean, all I do is every day is basically check it in the morning, check it at noon, and it hasn't changed. I mean, it's a good time to be working on all these spreadsheets. I know I've kind of gone crazy on spreadsheets, and I don't even like spreadsheets, but I'm trying to learn how to use them in a more effective manner so they won't frustrate me as much. Also, I've been bragging about I've been learning Python. No, I haven't. I had a consultation with Amy from Bad Financial Decisions, and she's a real coder. She knows how to do it all and everything. And what I've learned is JavaScript, and scripting languages are great and stuff. And AI can teach me Python, but I'm not even there yet. But JavaScript is helped me a lot because it's done all this does all the heavy lifting. It can do all this stuff that, anyway, but she gave me some advice on what the next step is and how to take it, So, but let's go over here just to the database. Part of the reason this database is a big frustration that it's so big, it says loading a bunch, and and I just like Hui. Well, okay, Hui isn't 3 months old yet, so Hui is trying to pick up the NAV return for the quarter, and it's not there yet. But I just left it on there. It'll start picking it up. It turns 3 months old, I think August 6th or something. So Hui will be on there soon enough. Right now, it doesn't look like we have a lot of loading problems, but let's just kind of go look at MSFY. If you guys want me to look at one for you, we can too, and try to see. I want this to be fair. I mean, I'm always about fair. I mean, look at old PLTW is not doing that well. Well, anyway, we'll look at that. Let me find MSFY. See what the inputs are. Look, WiMAX is a great one. I mean, but it does. I have the old formula right here. The max factor is the more aggressive formula. Then I have the Scaredy Cat formula, which is where I factored in, where I did put a little measure of safety in there. So, but it wouldn't have been on the list in either case. I can show you some that would be on the old list and are maybe like 22 now or something. Anyway, where's this darn MSFY? There's that old why. I like making the joke. Why did I invest in this? I don't know anything about it. I just, it's a dad joke. All right. I actually do. What is it? It's a fund of funds that does closed-end funds, I think. It's a closed-end fund of funds. Maybe MSFY got dropped off the data or something, because I didn't see it on that list. There's MSTY. I want to look real quick again, but I'm kind of interested in this. I don't know if you guys are, so I may show you. I may take another one to look at. I'll be darned. I think MSFY maybe got in unintentionally. Let's put MSFY in Hui's place. Apologize to the MSFY people. Now, if anyone saw my show yesterday, which I'm really proud of, I hated to come across like a Yulmax Karen. No offense to the Karens out there. My ex-wife her name is Karen, and she doesn't act like that at all. She's a wonderful, beautiful person. But no offense to those people. Maybe for me, I should say a Ken or a Kyle or something. Anyway, I wasn't trying to do that, but we haven't really had a test yet. All we do is go up. And when we do go down, it was vicious in April, but it was quick and shallow, and then right back up. It's kind of the same thing with 2020. So, I mean, the market won't keep doing that forever. As long as it does keep doing that, it's a great environment for these funds, but it won't keep doing that forever. Okay, anyway, let's get a little MSFY and yeah, oh my gosh. Okay, but this is a good one. So look, 58% yield and 20% NAV return. Holy cow. So even if you just multiplied those, you could figure out that comes to that number, the max, yeah. So that comes to 11, which is a huge number. But then I divided by the daily average true range, percentage average true range, and they have a very small percentage average true range, meaning they have relative safety. So it makes their scaredy cat number bigger than their max factor. I'm not so sure. It may not. Let's sort it and see how it does. I'm not so sure. It may not still be in the top 5 or something. No, it's number 1. Look at that. Holy cow. I am so sorry. I don't know how that happened. I need a data assistant if anyone wants to volunteer. The problem is I don't have a budget. But I need a data intern. I've been using AI to help with the stuff it can help with, but man, okay, well, I'm so sorry about that. So let's go up here to analysis tools and let's hit create top 20 list. And then we don't have to do I made it where we don't have to do the reveal. If it's already up, it just comes up. There it is. Look at that. And the chart updates and the top 20 list updates. Okay, so sorry about that. All right, but this is good. I mean, MSFY. Oh, what I was going to say about that video I did yesterday, I got sidetracked. MSFY was a fund that, I'm trying to think, I think it was one of the ones that, I think MSFY was one of the ones that had enough that, oh no, that's what it was. Well, I'm just going to have to look again. I thought MSFY was one of the ones that outperformed the parent, or that, and I'm not, I think it was InFly actually. I may have to look back at that spreadsheet. Anyway, whatever, it's obviously good. This is the new buffer report. You know, the old buffer report, we might see that MSFY is catching like 80% of the parent's upside every day, but it's just, you know, we just look at one snapshot in time. This looks at the past 3 months, and it doesn't really compare it to the parent, but it compares it to all these other funds as to how much a combination of yield plus NAV return. I mean, that's all there is, you know, and I hate it that it's on top of, or I don't hate it, but I know the Coinbase fans are going to hate it that it's on top of COIW. You know, but anyway, it's COIW is getting punished because it has a gigantic average daily true range. It has like a 5% average daily true range. Let's go back. I love this kind of stuff. You guys probably don't, but I'm going to just look at this one more time. Main database. I mean, COIW is one of the most impressive funds ever. It's not even really a high yield fund. I mean, it's a growth fund. It grows like a growth fund. But is that what's impressive, or is Coinbase impressive? So the average true range for COIW is 6.2%. So yes, COIW's raw max factor number, were we just sorting on max factor, COIW would be numero uno. All right. And max factor is just basically yield times yield multiplied by total return. So then I thought about making 2 lists, a growth list and an income list or something, but that just gets too complicated. I'm fine with COIW being in the top 10. I mean, but I just want you guys to know what goes into this. But yeah, so their max factor would have easily got it, were it not for the 5% average daily true range. Because all of this is measured in percents, because I'm multiplying, I'm not mixing factors. I'm multiplying the yield percent by the NAV return, which is also a percent. Okay, and that gives you another percent. But then we could divide it by a 3rd%, which is a measure of risk, a really good one. So yeah, COIW is a 6.2% every day, you know. So I mean, which is, you know, anyway, it is called the max factor, not the Joe factor. And I like stuff that offers relative safety. Right now, I think MSFY is a better, or NVDY are better buys than COIW. That's just my opinion, because Well, what does a big daily average true range tell you? Well, besides the fact it tells you it's volatile, it tells you it moves 6% a day. So even though it had a 29%, max factor ranking, it could undo that in 5 days, 5 bad market days, or 5 average days, 5 down days for it. Whereas, something like MSFY, it would take like 20 days, or it'd take a longer period of time. Even if we run into a down streak, MSFY should handle the down streak a little better. So anyway, all right. I hope you guys like that. I'm going to go see what you guys are talking about. For a long time, I was making the max factor secret, but what do I care? It's just, I think some of you guys one person reverse engineered it, which is fine. It's not that big of a deal. But I do think it's a learning process, and I've learned a lot switching the formulas back and forth. But it's not fair for me to keep switching the formulas and not tell you what it's based on or whatever. Because I know we have guys in our room that love COIW and CONY and all the COs and stuff, and that's great. I just want to show you what it's actually showing us. And some people don't care about the extra risk, and so that's fine. Here'd be my advice to you: if you really want the best factor, probably you just go make your own spreadsheet and just line it up by total return, just sort of by total return. And that would give you your own metric. That's another way to look at it too, but anyone can do that. I wanted to make something that was a little bit more inventive. So anyway, all right. What are you guys talking about today? Are you guys talkative or not? If you aren't, yeah, what a day, Red Sox. I know. I mean, with Bitcoin hitting, let's look at Red Sox commentary with Bitcoin, BTC hitting 119,750. I thought we'd have an amazing up day. Yeah, it just kind of, it looks like Bitcoin's ran out of steam. Did anything get, not as far as earnings go. I've been working on other stuff, so I didn't even look at it. I promise. But let's, for those people that are option people, I am, but let's go we should look at this every day. This for a free tool, it's really good. I'm sure there's better ones out there, but you go to barchart.com and then you go to options market overview. I ought to probably lead with this every day. This gives you a wealth of ideas. If you're looking for trading ideas, this is one way to do it. Now there's Tasty Trade also makes a list of, stocks that are liquid, and then you can sort it by ones that have earnings coming up. There's lots of ways to do it, probably better ways to do it. This is just a really quick way, a tool that I like. But let's just look at that really fast. See if we can find the next hot stock or whatever. Okay. Unusual option activity. So these, who knows, but this just when a well could be involved, or who knows. AAOI, isn't that one of the ones that's been in and out of Alti? British Petroleum, is that British Petroleum? Yeah. Look at AMD, people buying puts. It could have been selling puts. It just means the put was active. And it's just the 34 delta, so that's and it's pretty close. It's a near dated put. Do they have earnings coming up? It may just be who knows. But anyway, so then we have Oracle. Calls, CSX calls, HOG. What is HOG? The price is right. I like $22. I like those. I don't like the ones that are $5, but the ones that are 20 to 50 or 15 to 50. That's the sweet spot, I think, for the risk reversals I like to do. Anyway, but I've never heard of HOG. It's HOG Harley probably. Yeah, okay. I'll go figure. I figured it might be. I don't know if they have earnings or whatever, but it shows you all that right here. So 730. Yeah, they do. They have earnings coming up before market open. Okay, so it's a straight sideways stock. It looks like 3 months it's gone straight sideways. But this is just a great place to go. Let's see if I can find you guys something to look at for tomorrow. Maybe Harley. They have earnings coming up. That's one that I haven't noticed otherwise. Are people, puts are active. It doesn't necessarily mean buying, but it's not a good sign when puts are active. But it literally could be, because a lot of people are selling them also. There's more sophisticated. I need to get as the station starts doing better, I promise I'm going to get unusual wells or something like that, where we have the ability to analyze it better. But anyway, for now, we just know puts are active. Okay, MicroStrategy, calls are active. That goes out to October. That's an at the money call. There is 54 delta, or probably one strike in the money, maybe. Or maybe not for me because of the skew. It may even be out of the money. Who knows? All right, most active options. I don't get a lot from this. These are just the biggest ones. Sometimes it reminds me of a company I hadn't thought about in a long time, but these are ones you should be able to get in and out of really fast. And I hadn't seen this opinion based on where the price lies in reference to the comment. Oh, wow. Okay. So they didn't used to do this. So like you can see that SMCI screaming by, according to whatever metrics they use, up 10%, and it's liquid. So you could, the theory is you could get in and out really fast. Anyway, this is cool. Intel, I don't look at that one much. Of course it's on a sell, but looking for a bearish idea. Maybe I might sell a reverse risk reversal or something in Intel, sell a call spread to buy a put or something. Or maybe just do some type of broken wing butterfly to the bearish side. Open. What is open? Is that, I used to know. Is it open door or something? I don't know. Anyway, you guys can look that up. Top covered call ideas. So I think these are interesting too. If you're really into it, go grab the full list. Here's what I do. If you're really looking for trades, when I'm looking for trades, this is what I do. I go to Tasty Trade. I look at YouTube channels and I look at bar chart. This is just a good cursory look at whatever's going on. Okay. Jackson's had enough. He's over there laying on the couch. He's done. All right, Jax, good night. I'll try to keep it down over here. I'll try to keep it down so you can sleep. All right. Good night, Jackson. But yeah, this is just a cool tool. Like you can even click here and get a chart. It's only $2.32. I'm not that interested in it, but what I do like to do is sort for annual return, or you can do everything. And when you subscribe, and I used to for a while, you can even download it, and it'll even do profit and loss charts. It'll do everything. But this is all the information you need right here. So annual return. So that this is basically the same thing that Jay's looking for. This is just what would this option, if I could sell it all the time, return? What's CRDF? Cardiff or something? Probably it's only 7.5, or no, it's only $3. I hate how they show these little cheap ones here. I know this SBET is hot right now. Look at these 40 call. Okay, here's one. I like the idea of this trade. It's $20, which is the right price. So you could go all the way up to the 40 strike call. It probably has all kinds of call skew. It's 95% out of the money. It's 53 days. I thought we may have talked about this on the morning show. No, we talked about, I think open was also 53 days. But anyway, this is a Tasty Trade profile right here. There's a trade. So this one's catching my eye. Let's go. That one would be something you could look at doing some type of maybe broken wing butterfly on or something. So the potential return's 114%, annualized out to 66%. But then this return right here, this 9.6%, that's just how much you make if the market goes nowhere. That's just the yield. So that the yield is 9.6, but then 66 is how much you make if it goes in the money, goes to the money. If it goes from 20 to 40, or no, actually you would make 114%. But it takes you 2 months. So you annualize that out, and there you have 66% annualized return. This is everything you need to know. That's the one that looks the most interesting to me right now. Then you also have, if you don't want to go out that far, it's trading at 20. The 20 strike call is also, that's 183% annualized return. So those are the ones. SBET attracts my attention. Maybe we could look on OptionStrat, but all I'm going to do is I pulled up OptionStrat. I'm going to pull it up. I'm going to show you it has a ton of call skew. And then I'm going to do some type of broken wing butterfly where I put a call out on top of it. Put a butterfly out, put a short strike right where I want it to go. So look at this 40 strike call. So it's bid at $1.80. Here, I got it. We got to look at this. We got to look at this. Sorry. I just said I wasn't going to do it, but we're just going to look really fast. Okay. So we'll do a long call butterfly. SBET, Sharpleak Gaming. Doesn't this have something to do with Ether also or something? 20. So we want to look at the 40. Remember, whenever you're doing an option spread, wherever you put the sold strike, a butterfly has 2 bought calls and a sold call, or it could be 2 bought puts and a sold put. Well, wherever you put the sold strike is where you're targeting for, and that's where the max profit is. So $25 risk. I mean, let's see. I went out too far though. I forget the date. It's 53 days. Let's see. So it's 30. Yeah, it's probably, I think that is it. All right. And let's see what this is going for. Yeah, there it is. Bidded. We saw $1.80 back there for a bid. Closing bid's $1.90. Think about that. You could, this wouldn't be a bad cover call idea if you wanted $190 real quick and you weren't worried about owning SBET. You could buy SBIT and it's SBET and it's, $190 off. You guys know how this stuff works. You could also probably sell a put, but sometimes on these, the calls are more active. I wouldn't want any risk to the upside in this thing, but let's see if we could do no risk to the downside. Probably, yeah, there we go. That's a pretty solid bet too. You only lose if it goes past, 44. Now that's exactly what it would do if I put that on. I hate risk to the upside. It'd be the next meme stock and it'd go to 300 or something. Anyway, based on closing prices, and I don't know how liquid this is, but dollar pretty liquid. You could construct some kind of thing like this where you had a free shot, and there's nothing really free, but now here's the problem though. If it gets there early, it doesn't help you out. Even if it takes 40 days and it's trading at 40, you haven't made any money. Because that's the disadvantage about spreads. They don't pay off until right at the last minute. And a butterfly is just a combination of a bull spread and a bear spread. Credit spread and a debit spread. It's just 2 of them smashed on top of each other. So yeah, you have to wait till 4 hours remaining to. But heck, that's if that's what you want or whatever. That's the play. That's one way to do it. That's one way to do it. And after all, there's very little risk in the trade. There's either $5 risk. Well, I guess there's opportunity loss because you could have invested in something better. And here you're pretty much probably going to make $5. But you do have a little bit of risk here on the upside. But, if you're also so inclined, you could something like this. But it has the same problem. I mean, it doesn't have quite as bad of a problem, but if it takes 30 days and on this one, it's at, this one, after 30 days, it only costs you $10. It's an 8-bagger after 30 days. That's not bad if you can get it to 40 or even if you miss and just get it to 34. So that's what catches my eye. I'm going to save that and put that just for you guys to examine. I'm just going to see. I just write notes and half so we know what we did this. I always forget. All right. Well, there's too much. All right. Anyway, it's all there. So I'll just give it to you guys. But that one's interesting. What does anything catch you guys' eyes? I like those types of plays. I'm always dreaming of catching the next GME. Or whatever. And it could be SBET. That could literally. I could see that being 30 or 40 in a month or so. It wouldn't be that thing's crazy. It's crypto related. I think Ethereum related. All right. Well, anyway, that's it for the option part, but thanks for asking that question. We don't do, I probably ought to lead with that every day. I really like mining bar chart for ideas. All right. I just want to see what's here. Hey, SB. I want somebody, SB, go do that. Go do that trade right there. It's only $10. Go do it 100 times. Spend $1,000 on it. If you want, I mean, I'll tell you what to do, but then then you can make 8,000 if it hits. I mean, not even waiting until expiration. Gosh forbid if it actually goes to 40 at expiration. I mean, you'd make like 50,000 or something. But that's when I like to take a shot. That's the way I like to do it. Oh, something I didn't show, but let's look just for educational purposes. What's the IV of this call that we're selling is 186. Okay, let's compare that to the at the money IV, just 149. So quite a bit of difference. You can also look at the IV differences between the legs. This one's 175, and that you're long 175, but then you're short 186 twice, whatever that equals. But then you're going to have to pay this one too. This one's 191, but you just have one of them. Anyway, it probably doesn't have all that much skew, but I mean, that's not the worst looking trade. $10 worth of risk, even if you can just get it to 30 in 30 days, which is a lot. That's a 43% rise, but it's a 4-bagger. So I've seen worse trades. And yeah, plenty of skew to go around. You're catching the show late. I hear you, Summit. I appreciate you being here. Mark, I appreciate everyone being here. They're hedging for earnings on AMD. Okay. I could see that. Yeah, of course. Of course they are. That's why it was active. Yeah. Here, I'm going to put this up here too. This is just a really good chart. A really good tool to have in case you guys don't use or know about this one yet. How's COIW going, Mark? I didn't see what it did today. I did see Coney was down a little bit today, but all right, there's that. All right, so I'm trying to think. Okay, one other thing I want to talk about, the box spread, and this is for Dan. Dan and I have been talking about the box spread. But I've also been talking a lot about free money lately. And so the box spread is technically free money, but there is not, just like anything else, it's not like there's caveats to it. This article does a really good job. I was going to make a video on the box spread, but I can't do it better than this article. I guess I could review the article or something, but if you're interested in the box, Dan gave me that article. That article goes in depth and it tells you what the risk is on the box spread, and the risk is regulatory. Or that's part of the risk. What they're doing, they're finding a way to give you money as return of capital, but they're doing it using something called the straddle rule, and they're also using it's kind of complex, but there's that if that rule gets changed. That could make the advantage go away. So it's tax free. It's tax free and risk free, but with huge caveats. Now, I was going to say my huge caveat. I don't know if Dan's watching this, and I didn't even tell him about this. But in the meantime, I've been thinking about this. Do you guys remember this story? I love how you just write like you talk in here. Tell the story about the guy who was doing Robinhood box spreads and killed himself. All right. So here's the story. Alex Kearns. So this kid was 20 years old, college student. You guys have probably heard this story before, but if not, we can review it. So he died by suicide, mistakenly believing he had accumulated significant losses on his Robinhood account. He was actively trading options, including complex strategies like box spreads in the Robinhood platform. Box spreads a strategy involving 4 legs designed to generate a theoretically risk-free profit if held till expiration, essentially capitalizing on arbitrage opportunities. Okay. However, Kearns became distressed when he was confused after his Robinhood account displayed a negative balance of negative $750,000. In a note he left for his family before his death, he questioned how a 20-year-old with no income could have been assigned nearly $1 million in leverage. He also expressed confusion about the options he bought and sold, believing they should have canceled each other out. Well, guess what? They did cancel each other out. But you get extra. I mean, it's not funny, but you get exercised the night before, but then lots of times the other position clears the next day. Your broker knows that. it may show a balance, but oh my gosh, this is a nightmare. And I don't know that his family may not have played some of this up, maybe to try to get money out of Robin. But I mean, that's an awful thing to say too, but this is just a bad situation all the way around. But one thing, just to be critical, I mean, this is why it's so important to know what you're on. If he's a 20-year-old college student and he's smart enough to figure out SPX arbitrage, which is what the box spread is, I'm just kind of almost not believing that he didn't understand that he did have another side to the trade that is going to offset the 730,000. I mean, the other thing is it's just 730,000. He's young. He has his whole life. I mean, no amount of money's worth it. I mean, blowing up accounts, even if he did lose that much, blowing up accounts is part of, it's a learning experience. I mean, even if it was a true thing, and it wasn't, he has years to come back from that. I mean, he had to be a pretty sharp kid to figure out how to do it in the first place, I would think. But maybe it was a case of Dunning-Kruger, and he understood just enough to be dangerous, I guess. But it's just such a bad situation. Anyway, you guys probably heard that story a long time ago. And Kearns attempted to contact Robinhood customer service multiple times. That's also the bad thing there. It's just a bad thing. Anyway, it's nothing really bad about box spreads, but this is more lesson of know what you own. That's why it's so important. And you guys all know this, but there may be somebody that doesn't comment that's watching this and watches every day. And maybe he's realizing that he doesn't know. They need to brush up kind of on the risk and reward stuff. That's all I talk about pretty much, is the risk and reward of options and high yield funds. So I'm going to put my Discord in there. If anyone's watching and hasn't joined our Discord yet, in our Discord, our guys are really, there it is. I'm sorry. Our guys, Scramble especially, is really good at answering option questions, but anyone will try. We have a lot of people. I mean, you can ask Mark. I mean, they'll take a shot. Any question you have, if you say, hey, man, I'm new here to this Discord, but I was wondering, I want to do these credit spreads, but I really don't understand, can I go ask anyone in our Discord. We have lots of smart guys. SB can strain you out. BR can help you. Anyone. Scramble can. And yeah, if I'm in there, I'll throw in my 2 cents. Anyway, but and that's one of the best things I feel about our Discord is that's why I call it Max Fam, or actually just because I called it that. It's not why I called it that, but it's a fitting name because we fight like brothers about politics sometimes. We block each other sometimes. I mean, but we, and sometimes someone will say something that hurts my feelings, or I'm probably said stuff that just like a family, but we're always there for each other. So we have been so far. So I would highly encourage anyone to get there. The only rule on my Discord is we try to keep political discourse the same thing you would do at Thanksgiving. At Thanksgiving, you don't want to ruin your Thanksgiving, even if you have an uncle that just comes to town once a year and he's the total opposite side of you. You aren't going to blow him up at Thanksgiving because whatever. We use the Thanksgiving doctrine, or that's what I've invented. We have the Thanksgiving doctrine. You can disagree with people, but you don't tell them that they're stupid. And we don't do any. And so far we really haven't had much of that. So that was my only fear about Discord, is just that there's so much discord in Discord, or the discourse becomes very discordant in Discord. Anyway, all right. Well, so join our Discord if you're just out there watching. And Mark, you hurt my feelings on a daily basis. No, I'm just joking. But you know what I'm saying? Sometimes I'll see something, I'll go, man, I made a video on that last week, not from you, but sometimes I'll see something, and it's usually somebody talking about erosion or something. I don't know, but let me show you something. But yeah, no one has ever really hurt my feelings, but I'm saying I get upset sometimes, and I'm passionate about stuff. And sometimes I believe something passionately. I don't see why this other person doesn't believe it. But anyway, that's all part of, that's just all part of the deal. And anyway, thanks for the apology, Mark. And likewise, I apologize too. The worst thing Mark's ever done is he's disagreeing with me. He thinks Little Wing is in G major, and it's not. It's in E minor. And I want to tell him but he won't listen to me. And that hurts. No, I'm just joking. All right. But that's probably the only disagreement Mark and I have ever had. We may disagree a little bit on politics here and there too, but other than that, we're right there together, just like brothers. All right. So what was I going to show you? Let's look at another. I closed some windows, believe it or not, but I had a window I wanted to show. I really like this Open Mike. I don't know if you guys have watched him. He used to live in Austin. He's an option guy. He used to be a market maker. Very smart, very dry, but very smart. Okay, I saw another influencer. Let's see. Let me type in here. Let's just type in no nav. Somebody found a stock with no nav erosion, or several of them. And this is what really gets me. And it's no one in our Discord, but this one gets me. The Anchor system. Oh my gosh. Anyway, I'm not saying these guys may be the greatest people in the world. I like this guy a lot, Coach. We're friends. I talk to Coach all the time. Lots of times this is just like to get people in or something. But I saw a guy the other day, just this morning, had found some. And I was just going to try to show you guys. Yeah, this is here. And I agree with what he said. Okay. Dividend degen. No, it's not him. Anyway, he was talking about, maybe you watched my video or whatever. He was talking about, look at these. These are no NAV decay. That's what I want. I don't want any NAV decay, right? There you go. That's what you need right there. Goldman Sachs, JP Morgan. Sweet. There it is. And I've never met this kid. He may be the greatest kid in the world. If he's watching, it's a great video. I mean, you do a good job. Keep up the good work. What I was noticing is the stocks, the ones he found were good ones. I mean, triple QI, great thing, but they were all ones that were low yielding. So I'm just saying they're all gonna go down in the down market, but if you can pick the low yielding ones, you do have less problem in an up market. And that's why people, I swear that's why T-SPY and triple QI and those ones that yield, that's kind of the sweet spot where you get enough yield to attract people at 12 to 14%, 15%, something like that, enough yield to attract people, but remember, the yield is a tax on the future upside of the NAV. So, but you don't get that, you don't really have to pay that heavy of a toll. So anyway, I'm not saying anything bad about them. I like this video, or I like it because it confirmed my pre-confirmed biases, because they were all low paying. Now, BTCI, okay, that's lower paying than the other ones out there. It's a lower yielding, I should say, than the other ones out there. So he liked BT, but this is the kind of stuff that I get triggered about. Now, I would triple QI. That's good. It doesn't have really that much to do. I mean, it's because of the yield is low. Or now I agree with them on this one. I love Biddy and Baggy, and he liked Biddy and Baggy. But anyway, these all have tons of erosion and decay. I mean, everything does. That's just the way it works. It just, if it doesn't look like it is right now, it's because the market's been on fire. Wait till we get a sideways or a down market, and he's going to, and Biddy, I think is Biddy double leveraged, or no, it's a 2%. Let's see, Biddy's going to have problems. I mean, someday in the future. Anyway, but for now, I guess it's fine. But that's the kind of stuff that I see that triggers me. And that no one, if you guys want to make me mad on April Fools or whatever, just start a bunch of conversations in Discord about, hey, I found this stock with no erosion, and and that's, if you guys want to play the joke on me, that would get me mad. That's one way to do it. And it's not like, and I shouldn't be a jerk. Because yes, some companies are better at managing their rolling and stuff than other companies, but I think that's going to manifest itself in the NAV return and in the yield. And when you get a good combination of both, I think we'll see it in the max factor. And I think the top 10 are pretty good. I'm sorry that MSFY wasn't on there, but I think any of those are decent looking, at least mathematically. I'm getting pushback here from Dan. Now, Dan's a musician too. E minor is the relative minor of G major. They use the exact same notes. They're synonymous. Yeah, they are, but true. And I'll talk about guitar some other time. But no, they are. They're it's like saying they're like a word that sounds the same but is spelled different or whatever. Exactly. I get that. So that's why I'm saying market wasn't really a fight. We were just talking about, I'm saying it's an E minor, starts on an E minor. Anyway, he's saying, but then I looked at some analysis on the internet, and somebody said it's in both keys. And the intro, the famous intro, is an E minor. But then when you go to the sliding part from the G to the C, guys know that that is where then it slips into major, and it does have that major tonality there. So anyway, the best songs really aren't in a key. Jimmy wasn't thinking E minor. He wasn't thinking E Dorian. He's not thinking it's in B Mixolydian. He's just playing music, and that's just the way it comes out, in my opinion. He may have known or whatever. It's just music, and it's one of the most classic songs ever. It doesn't matter if it's an E minor or Z minor. It's just still a classic song. Anyway, yeah, nobody writes the minor keys. That's what Mark was saying. That's what Mark was saying for sure. And I've always had a problem because I've always been a Gilmour fan, and I've always studied people that do that solo from the minor side of it. But lately, I've said it a million times, I've been learning country, and to learn country, you have to learn how to solo over C, D, or C, F, and G, or whatever, 1, 4, 5 all day long, major. You don't even, and that's true. And there's a million songs out there in that thing, and they don't even touch minor. And it is. So I'm talking blues and country and stuff. It's always major. You might have The Thrill Is Gone by B.B. King. They have occasional minor blues, but it's major dominates everything, and it's something that I wasn't even in tune with until I got sober, really. I couldn't, if somebody played Sweet Home Alabama at a jam session, I had no idea. I mean, D, C, and G, what's that in? You could call it G major, it's 5-4-1. So you could G major, so E minor synonymous. I guess you could just blaze over E minor, but try that. It does not work on Sweet Home Alabama. And of course, but then at this point you have to understand the modes, and that actually is in D Mixolydian, but I got all that down now. I know how to do it. Anyway, but yeah, I agree. But yeah, and I also agree. If you want a stable nav, you need to accept lower yield. But then amongst the ones, you can still make a universe of 10 to 12% yielders, and it's still, I shouldn't dog on these influencers. They're just trying to help and make. Then you can still try to pick the best ones in that range, and for sure. Yeah, Spud. Let's look at Spud really quick. Hey, I saw a video on S-Bar and XV. Do you have any S-Bar or XV? Somebody put out a video on that. I didn't really understand that completely, not 100%. Well, we'll just look at S-Bar and XV first, then I'll compare it with Spud. All right, so S-Bar and XV, these are from, where are they from? Simplify, right? XV is a 15% target fund. I forget what they do. They sell premium. All these sell premium. S-Bar sells barrier options, and XV, I think they do the same thing, but they sell barrier options that are closer to the money. They sell a 15% barrier option is what it is, which is basically, to me, kind of like a 15% out of the money put spread or something. But S-Bar sells I think 30% out of the money put spread. So they do it synthetically. A barrier option is a little different than a put spread, but it's a similar concept. Anyway, yeah, those. Let's see if I wonder why they aren't in the max factor. It looks like they've been around since April 15th. Yeah, so May, June, July, so they should be in the max factor. But let's just look at the inputs. Not enough. Okay. S-Bar, if it is making probably a 30% yield because it's paid $56, so that's $2. Now at that rate, it's paying like an 8% yield. That's right, it's paying like an 8% yield, and it didn't get any NAV upside. Start price 25, ending price 26, and this is for the last quarter. So yeah, it's not going to be anywhere on the list. XV did get some NAV upside. It went from 25 to 27. That's not nothing. That's 10%. That's pretty good. That's better than old Alti did, just getting 6% for the quarter. So, 10% is not nothing, but let's look at the dividend. It's 65 cents for a quarter of the year. Annualize that and make that $2.60, about 10%, something like that. Anyway, but I bet those do well as far as they're not paying very much tax on the upside because the yield isn't high. So let's compare SPUT to XV. All right, well, look at SPUT. SPUT, you can just tell by the line, looks really stable. Doesn't look like it has a lot of variations from day to day. That's a good fund. I think they sell puts on half the portfolio. It's just a low NAV, but I mean, low NAV is great for upside. Let's see why this one wouldn't be on the max factor. Maybe it is. Well, I could just tell you by looking at it, 24 to 26 on NAV for a quarter is not that impressive. And you combine that with kind of a low yield, it's not gonna hit the max factor. And not that it may not be, like I say, I use 99% of my own judgment. I'm not going to use some stupid formula to make that I mean, I'm going to look at it maybe and take the opinion from it, but I'll tell you this, that stupid formula, I had no idea how good MSFY was. It does bring, it brings to your attention things that I might not otherwise look at because I'm so in love with, I follow Alti and GPTY and those ones that I follow. So I do think the max factor is good for scanning stuff and for giving ideas, but yeah, those don't look like they're anywhere close, but Marcus may have them for a different reason, and he may have them because he studied them and he likes what they're doing and he thinks they're going to, the max factor can't make your decision for you. A human's going to be able to think a lot more complex than this is the yield, this is the total return, and this is the risk, and just make a number out of it. The other thing to remember about the max factor or any metric for that matter is the max factor, for instance, just goes back 3 months. So there could be ones that aren't on the max factor that are great. You look at their 1 year performance, they protected capital. Maybe they just haven't done well lately. You just have to know what you're looking at. And we just drill down on the last 3 months. Okay, Marcus, what are you saying here? You had SBAR until you saw it's in SVOL. Oh, which you also hold. Yeah. Yeah, you just hold it through S. Yeah, I got you. All right, there's 16 here. I don't really go for clicks and views much. I'm going to remind everyone because Dan's not here and he usually does it. Thank you for being here, and be sure to hit subscribe or give a thumbs up or make a comment. I don't know, whatever he always says. Hey, I haven't seen you around here before, Sosa Ribeiro. Or if I have, I don't remember. But yeah, I think we do have a good Discord, Froggy. I think we do have it, and we talk, and that's the other thing we do, because as you guys can tell, I'm fascinated with politics and music and pop culture and stuff, and we talk about a lot of that stuff in there too, and just have a good time. This morning we were talking about frat culture in the 70s and 80s, mainly me and another member, but yeah, we it's a wide range of topics in there, but seriously, I do feel like we have a good group of guys. I mean, if there's a question in there that Marcus or Mark or Scramble or Tom or me can't answer, there may be a few of them, but there's not going to be very many, at least with the options or the market, because we have a lot of experienced guys that do a lot of trading. SB knows a lot as well and is a good option coach. So, yeah, I think we're a good resource, if nothing else, just for bouncing trade ideas off of and stuff. So tomorrow we will look at, let's look at maybe an SBET trade for tomorrow. I mean, I know we've already looked at SBET, but I might do one of those in real life. If I do, I'll tell you. We'll get into taste trade and look at it. It's just, I mean, it's the next GME, right? And even if it isn't, the thing is, because that 40 strike call, and look where the 40 strike is, it's at the previous high or the last swing high. So maybe I think other people are buying it, probably playing for the breakout, and that's why VIV is so elevated there. But it also could be that people are selling it and the market makers jacking the IV to lower his exposure because he's also offsetting the risk somewhere else. He's going to buy long stock if he's getting hit and having to sell a bunch of calls to people. A lot of people want to buy calls. The market maker is now short calls. And so he'll be short calls, and he might jack the IV up because he's going to have to buy stock to offset his risk in case it does go in the money. And so if he can charge a little bit more for it, those market makers figure it out, just like an insurance company. They figure it out where they're always going to come out ahead. In fact, I've heard that actuaries who set insurance rates and do insurance stuff, market makers use actuaries and actuarial science. So But anyway, SPED, does it have earnings coming up? I guess we can't tell on here. It may not. I think it's just simply a meme stock. What is this S right here? Oh, that's a reverse split. How long has this thing been out? Look at that reverse split. If the split price, it used to trade around two grand, and now we're trading. Now we're hoping it goes to 40. That's. Look at this last bar here. I mean, that one bar went from, well, pre-split, it went from, yeah, that's a crazy bar. Anyway, but that also, it's a monthly bar, so it was like 100x on that, just on that monthly bar. All right, guys. Well, barring any questions, I'm going to let you guys go. But I'm going to go back and look at questions. There's probably stuff I forgot to talk about, but if you guys don't get me sidetracked on, or Ofer doesn't ask me something, I'll let you guys go. You wanted to ask about whether I think the NAV stability always applies. Take a look at OG, PBP. Okay. All right. Let's look at that one. That's one I know about, that one, but that one has not been brought up in a long time. Hey, Dan, I've already reminded everyone to like and subscribe because I didn't know you were going to show up, but you can remind them again if you want. You really didn't miss much, but I did tell a story about the box spread. You may want to replay it later. It's nothing that you don't already know probably, but we talked a little bit about the box spread. So I think it always applies. Well, let's look at PBP and see what's up here. Let's see what's up here. I'm not trying to be too negative on these things, but I would rather be a little too negative than too positive. What else is happening right now in the economy? The yield curve just uninverted. What happens when the yield curve uninverts traditionally? It's not good. But that, be that as it may, that's fine. But also, what else is going on? Are we not in maybe the hugest bubble of my life? I mean, I remember 99 and 2000 like it was yesterday. And I remember the lost decade. I was managing money at the time. So, I mean, I remember that well. There was people that invested in Yahoo and thought they could never lose. And so anyway, wonder if we are at one of those other crossroads, the yield curve's inverting. We're in a huge AI bubble or whatever. And maybe it's also a covered call bubble. Maybe not, but I'm just saying, hear me out. Maybe it's a covered call bubble, and a market bubble. So, I mean, anyway, but my advice is just keep your high yield exposure smaller, on the smaller side. And that's what I would do anyway. And if you have margin debt, things are going great right now. Now would be a great time to pay, because yields are going up, everything's going great. Pay your margin debt down before the crash happens. And that will give you more safety. But still, if all of these are going to go down, even PBP, if the market goes down. So look at this. So PBP went from 24 to 1937 at the worst. Yeah, that's not bad. I mean, but it's still about 20%. So it's not immune from going down. And that was only in a 15% pullback. But let's look. So it pays a 10% yield. It's a pretty good yield. I thought it only paid 6%. Okay, so they're selling puts. Well, they're calling it a buy right, but it used to be a put buy right. That's what PB stood for. This is one of the old ones. It's been around forever. Let's look at PBP. Maybe I need to do some content on PBP. Let's compare PBP to another old one, and I'm going to say Global X. So we'll do XYLG. But I'm just saying, combining all those things, I just think it's a good time to be cautious. Yeah, the bubble could go on for another year or something, and that's fine, because that'll give people that's all I'm saying. Just make sure that you aren't 100% in covered calls right when the bubble, 100% leverage covered call funds, because or that's my advice anyway. But I don't have all the answers. I could be wrong, but maybe everything keeps going for another 10 years. It would be great. It's what I'm hoping for. I always hope for the best and prepare for the worst. That's just kind of the way to do it. Okay, so let's see. Let's go back. Can we not go back further? I guess that's as far back as PBP goes. So look at this. They started at a great opportune time. They started in October of 2020. What a great time to get in the market. I mean, it would have been better in May or June, but I mean, anyway, you can see they've done really, really well. Now, XYLG is not known as a powerhouse, and PBP is behind a little bit. So I mean, not that it's not a great thing. It makes 8% annually. That's your total return. That's all that matters. That or total return is how the bills get paid. I mean, that's the business end of it. Yeah, I mean, but like I say, XYLG is not a powerhouse, and it's beating it. So no one would call XYLG the GOAT, right? But let's do it like this. But to be fair, let's give PBP a chance. So let's say if we bought PBP on the last day of 2021 or the first day of 2022, which had been a bad time to get in the market. And then let's say we got a margin call or whatever, and so we sold it right at the lows, which sucks. I'm not, hopefully, but let's go see what would have happened if, let's go from to October. I think that was the low. And we'll compare it to XYLG and see who did better on the way down. Maybe PBP protected capital, but better on the downside. But on the upside, it looks like it left a little bit of money on the table. Not that it's a huge deal. I mean, there you go. So it did a little bit better on the downside. That's really good. So, only down 12% instead of 15. That's pretty good. If you annualize it, it's 15 compared to 18. So 3 on 15 is 1/5. It's 20% worse. Or PBP did 20% better than XYLG on the way down. So yeah, it's probably a fine fund. Let's just look at this dividend, 20 cents. The dividend is what I didn't think. The dividend used to be kind of low, like 6%, but lately it's at 10%. So, but if you wanted to, but so what I would be more interested in if I was looking to call something a GOAT, and I don't know how this will work out, but I mean, I haven't pre-planned this, but I mean, let's compare PBP to JEP-I, because it came out around the same time, around October of. It should be a fair comparison because it came out in late 2020 also. JEP-I did. It's also S&P based. It's also covered call based, or it's covered call based. All right. Yeah. So, I mean, and I bet you that JEP-I also beats XYLG. The only reason I know this stuff is because I look at it all day. Or XYLD, I'm sorry. It may not beat XYLG. We'll see. No, look at that. XYLD's, or wait, but that's against PBP. Oh, shoot. Okay, we already knew that. Let's compare JEP-I. All right. I mean, look at JEP-I. It compounded your money at 12%. That's pretty good. I don't think, how much did the SPY compound your money yet? If I had to give an OG award out there, it would probably be JEP-I or JEP-Q. And I haven't just changed. I've said, and I usually say JEP-Q because I'm a NASDAQ guy, but when we're comparing against the SPY, it's not fair to compare it against JEP-Q. So you can see there, it ended up tying. And right now it's just about tied. But look at that. The SPY compounded money at 13% over the past 5 years. This thing compounded money at 12%. I mean, that's pretty good. Think about the rule of 72, which is if you divide the number by 72, that's how many years it takes to double your money. 12 goes into 72, 6 times? So you double your money every 6 years. I mean, you can do some pretty good damage, not like you would have your whole account in JEP-I, but 12% annualized return is not bad. I mean, it's a good place to start, Yeah, you'd rather have 15 or 20, but 12% is pretty good. 12.53 is pretty good. So that's what I would look at. Yeah, and on average, it's been a really good year. On average, SPY runs about 12 or 13%. Real quick, let's go back there. I know I was going to let you guys go, and I wanted to, but this was a good question. And it kind of ties in with some other stuff we're going to talk about. Let's see if JEP-I or PBP protects capital better. There's no one size fits all. Let's look here. We'll go from January 1st, 2022 to October. Oh, that one. Okay. Oh, hang on. I didn't realize I was cutting it off at October 28th. So JEPI protected capital better than PBP. But let's make this go all the way to the close, and let's make this. Our bullish test wasn't the right dates. Okay, now let's go on the bullish test. So on the bullish test, yes. Okay, and it doesn't really get 12%. That was high. For 5 years, JEPI is getting 10%. That's still good. PBP is getting 9%. That's decent too. Let's compare JEPI to SPY. Yeah, SPY does get, 8% over the years and stuff, but over recent years, it's been getting more like 10 or 12 or something. Here we have SPY since 2020, 17%. That's crazy. Yeah, its long-term average is 7 or 8, something like that. I mean, that's crazy. Choices, right? Yeah, BBP is it's way. Yeah, no, it definitely is way older. It definitely is way older. That's one of the first ones. There's another one out there that has a lot of record, a lot of track record. So, and I forgot to mention that it's called First Trust, FTHI, and they go back pretty far too. Let's look at old First Trust here. All right, so that goes. So First Trust must go back to 12. Let's go back a little bit further. See how I think First Trust was like 2017. Was their date. No, 2014, or one of them was 2014. Yeah. I mean, these are both OGs. I mean, these are both OGs. Now, I mean, let's compare FTHI over that time frame to the SPY. This I guarantee you that PBP back in the day they were all fully capped. So this was fully capped, and that's the reason it did. That's one of the reasons I tell young guys just to get SPY or whatever. But because you can see you can end up with leaving a lot of money on the table. Modern covered call funds get more upside than that. The modern ones, because they do spreads and they use in leverage and stuff. So, but yeah, it does have a ton of track record. So does FTHI, and so do those Global X ones. So those are your OGs as far as age goes. Is Global X, FTHI, and PBP, which is the Invesco Put Buy Right Fund. But yeah, when I first got into these, I was looking for ones that have been around forever, and I looked at PBP a long time ago. All right. So if there's not any questions, let's see what Mark's saying. But the IV is decent. You can usually make a lot of money selling daily SPY options unless it gaps up every day. Yeah, unless it gaps up, then it ruins your 0 DTE vol, or it's got to be aggravating. It's got to be aggravating. Yeah, but I appreciate you mentioning it. It is an OG, absolutely. It is an old one. I appreciate you. Well, maybe this is a different one. BP. Maybe I'm typing the wrong one in there. BPB. And let's go back to 2003. BP. So I think it is PBP. Let's see how far it goes back. 2007. Yeah, okay. We just looked at that. Yeah. They've been around forever. Lots of track record on that one. Lots of track. And the other thing is, it may not be fair for me to look at it and say, well, it doesn't do as well as this one or something. Okay, maybe not. But at the time, because I looked at that fund a long time ago, they were selling puts in the monthly time frame. But maybe they were selling at the money puts, so they weren't catching upside. And I bet they've revised their formula, because if you look at it since 2020, it's keeping up pretty well. It's doing a lot better. So it's not really fair to look at something without knowing, hey, they may have been doing a totally different strategy back then. They may have had a different client base, different goals, different whatever. So, but I love to look at these things. So I appreciate you guys bringing them. I'm making sure there's no one I missed. Yeah, SMCY is a monster, Red Sox. That's doing really well. All right, guys. I appreciate you all for being here. I'll let you go, and you guys have a wonderful what's left of the rest of your afternoon. I will talk to you later.